DNL. Now, DNL is looking quite interesting, although it has not confirmed a particular reversal base yet. If you do remember earlier, I did show you a picture of a wedge formation in MPI. And if I may draw something similar into DNL, it seems to be making a very similar pattern into it. So we will follow this particular wedge type of pattern. And although it did fall back today, it did not break below the lower end of the wedge just yet. So there's still a potential that this pattern could still be completing its wind up. And also, we did see that it did not go back down yet to the low that it made, closer to 9 pesos and 70 cents. That, by the way, is major support for DNL, and as long as that low here is not broken, then the potential for this pattern to become a reversal pattern is quite moderate, maybe even slightly high. And any push up that would come over 10 pesos and 30 cents should be able to confirm the breakout of that particular wedge, and you might be able to see something more firm come up for DNL if it can accomplish this. So for now, I'll actually stay quite defensive for the meantime until I see something more aggressive come into place, because we don't want to walk in this thing too early, because if we do come in too early and it decides to retest the lows, and it might bring us to a situation that we may have a hard time controlling. So keep an eye on it, because the potential here is good, but we don't want to run too much ahead of the price and let the price tell us when it's time to get in. Jollibee. Alright, now Jollibee, I'm still quite neutral with the particular stock, although the rally was actually pretty good. It went from 245 to 293 pesos, and it's now working in a corrective stand. Now, if I were to be able to draw a reactive trend line on it, it seemed to have broken it a little bit, but we need prices to be able to move higher than 275 or 276 to be able to tell us that the rally might continue. Right now, it seems like the corrective effort remains. MACD is slightly moving below the zero line, and that's an edgy place to stay. It does not enforce a very aggressive stand as of right now, so what I would do is I would let it go and consolidate a little bit more so that it can wind up a little bit more, and hopefully if we can go above that 276 marker, then it should be able to give us a better 2 thumbs up position to be able to move into it. So for now, just like Ayala Land, it's not as bad as the initial ones that we talked to, issues that are going back to a new low. And for this particular one, we're just waiting for a bit more confirmation that demand can settle in and generate more lift if that resistance area I spoke of can break. Then we have SM Prime. Now, SM Prime is also into a wide consolidating band. It's a horizontal band sideways, and we're just gonna have to wait for prices to be able to move out of that particular horizontal band. Just looking at the bigger picture, this could be the bigger nature of that band, but we could also have support tighten up over this area here, and I do hope that it can stand above that upper band. Normally, the good reason for it standing above there could be that there may be an intensification of demand here. And if prices are holding into this area, then that low point of about 35.50 or 35.40 should be able to present a good enough support level to hold prices up. And if prices can also hold above the upper range of this area, it does tell us that the buyers are seemingly willing to come back in despite prices not pulling back so deep. That should also present a very good scenario if it can happen to do this. But if that support area here breaks, then again, we should be able to anticipate that prices may need to be able to walk back closer to 32 or 32.50. Somewhere there will be the lower end of this band. I do not expect this to go way up back to here immediately. Maybe it'll be more protractedly if ever, but any break of clearly over 39 or 40 pesos will obviously resume itself back here. This stock has shown its resiliency before in the last corrective phase. It's done so again now, so SM Prime seems to be a pretty good position to be able to hold long term, because the downside that it presents is quite minimal compared to many of the others that we've seen so far. GT Capital. Now, GT Capital is one of those that also entered into a new recent low, so I would qualify this as relatively one of the weaker stocks that we have technically being monitored. However, I am seeing some signs of divergence. Now, that word divergence simply means I am looking at this indicator here in the bottom called an RSI, or the Relative Strength Index. And if you notice that as prices are showing a low from here, followed by this one, and followed by this one, I am not seeing the same in your RSI. That means as the price continues to move lower, there is an essence that it's actually getting stronger and stronger despite the new lows that it's getting. We want to see that as an evidence that the downtrend is getting weaker, because that's the first phase in identifying a potential reversal from a particular company. So all we need to do right now is hopefully that this rally can show more substance, maybe push itself closer to hopefully 913 or higher. If it can do that, then it can add the second element. Not only is it resisting the decline, but it has the ability to make a rally. And that should be able to put itself one step closer to confirming a potential reversal for this. Where, like I said, we take this in due time, because as it's just recently gone back to a recent low, we want to see more evidence that a trend reversal is being presented before we come aggressively in buying this. If you're thinking of doing this for the long term, again, you can also do this buying it gradually along the way, given that the divergences are showing. You might miss maybe one more opportunity to decline, because it's possible it can still do that one more time, but it looks like there could still be some degree of sustainability coming out of this trend. Let's look at PLDT. All right, so PLDT has actually been able to make a comeback since what we've looked at a few weeks ago. It actually got stuck into an area pattern here. And that consolidation may be trying to be able to push out of that resistance. Perhaps the underlying reason could be seeing the market leader in its sector, which is Globe Telecom, which has been very powerful recently, and it's managed to be able to resist coming down in any serious way. And it seems that the telcos seem to be rejuvenating themselves by way of company performance. And perhaps there could be an underlying condition that people are starting to accumulate these telcos gradually over time. And perhaps that could be the reason why we've seen relatively strong impact into the company. But again, we want to see prices try to claw itself out of this consolidation pattern over here in order to render better effect for the particular company. For now, if you do have it, I would suggest that you hold it for the instance, and maybe you can put a nice protective stop at the low that we saw a couple of days ago, closer to 1370. So it looks like your risk would be minimal, and if it does break out, that you might have good upside, maybe even looking somewhere closer to 1550 or maybe even 1600 as a potential price target. Then we have CHP. All right, unfortunately, CHP broke back into a new recent low, and if you notice, this trend line which I've drawn suggests that the ability for it to go through a potential reversal situation did cut itself down, and because the support had broken and prices had fallen below the moving averages, that we've seen the downtrend come back into life. And normally when we see support structures like this break, our advice really is to head back into lightening down to protect ourselves from any incumbent risks that are coming out from here. In the last 2 days, however, I've seen quite heavy declines into CHP. You notice your RSI is now at 25%. That is already clearly showing you an oversold structure, and there could be a potential that a rally may be framing up soon. Again, since this is an oversold rally coming from a downtrend, again, rallies from here may be temporary. So if you do get the opportunity to lighten into any rallies that come out from CHP, attempt to do so in preparation for a potential reversal pattern that may yet come sometime later. So again, tone down your aggressiveness. In fact, hoist up your defensiveness, and I would rather shift my prospects into something that's showing more solid footing rather than very weak issues like this. Meralco. Now, Meralco has actually done well trying to resist its declines. Instead of showing a very formidable decline, you would notice that it seems to have built itself into a consolidating pattern. Let's draw it out for you. So that channel that you see there pretty much gives you what your trading range is. Support would be between 350 and maybe even extend that to about 343 if it will generate more weakness. MACD is still not looking too well, but given that it's stuck inside a consolidation, I will not put too much weight into momentum right now because there is no momentum in a sideways market. And right now, we're going to be range trading this stock in view of the pattern that you're looking at. So that will be between 343 low and a high end, which would be about somewhere here. That'll be about 383 as a high. So for now, you can range trade Meralco for the instance. Then we have AGI. Now AGI also took in quite a bit of a rally in last Friday, and this particular rally managed to be able to pull itself up to where you see into the particular graph. And this particular rally that you're looking at, again, is also coming from an oversold situation. So normally rallies like this are temporary. But again, in order for us to be able to show greater strength, we want prices to be able to climb over most of the moving averages, if not all of them. So we are thinking resistance would be closer to about 13.15 first. It would be nice if we can see some pullback here and generate a higher low, hopefully higher than 12.34 or 12.50 preferably. But as long as this low is not broken once again, the potential for this to try to solidify a base and turn around will still be there. After all, if you look at the bigger picture over here, it did manage to be able to move over this longer term downtrend line, and because of that, the potential for AGI to counter its decline is very much in place. Now, given that the price just went up a bit too fast, I think it's just but necessary that people took advantage of that as a selling opportunity. Now we need to see accumulation come back into place, which it hasn't done so as of yet. So give it some time, it may need to wind up a little bit more. All right, let's have a look at SM. Now, SM also took a bit of a nasty spill after breaking its 50-day exponential moving average, and the break of this support actually facilitated a 3-day decline. But in the last 2 days, we did see a bit of a rally off that. Now, this is nothing out of the ordinary because the corrective element is still in place, but because we are coming from an oversold structure, that yes, we do get some rallies or suspensions of those declines immediately. What we need to be able to see for SM is its ability to hold over the lows that we've seen back here in June. The low that we saw back there is closer to 827. So that is a price that we don't want this to be able to come back to, and hopefully we can see a higher low in here to be able to stand off. I'm a little bit worried, however, that the MACD is actually dropped down way below the zero line. That tells me that upward momentum has been extinguished, and that corrective momentum, or the ability for it to be able to make more corrective drives, is still quite strong. And so that tells me to be able to stay also into the defensive mode. And given the context that we did have a support break over here, I think we may need to be able to play a little bit more of a defensive game for SM as of now, because there's still a potential that this is going to try to come back down to the previous low. So use these rallies to be able to lighten, and then we'll just double check to see how it comes around to be able to make a support test. If a higher low can be shown, then that should be able to give us good reading that the stock is managing to be able to generate that particular supportive interest, and that a foothold was already been secured. But as of right now, I think it's a bit too early to say, and I would suggest lightening first into this rally until we see another support test. Then we have Robinsons. Now, Robinson's Land actually didn't do well last Friday when everything else started to make a recovery. And perhaps it's because 2 or 3 days before that, it did also break through the key moving average. And after faltering into this area, it managed to make a bit of a recovery today, but it doesn't show too high a spirit just yet. The high volume last Friday was good. That means that those perhaps who wanted to sell at that moment probably did so, and that could be the reason why we saw a resulting advance today. However, MACD still look quite wide, and to me that shows that corrective momentum is still strong. If you were to look back to what happened here in June, you would see that off a very big MACD spread like this, despite the rally day you saw here, it could still force its way back down and do a retest of the low. And it's something similar that may actually still happen to Robinson. So I don't want to make, cast myself too early into this until we can see a confirmed level of demand attempt to be able to hold on to Robinsons. In line of that, you probably are going to have to anticipate that Robinsons may make a very wide pattern. So the top end of it would be somewhere over here, and of course the lower end of the range should be closer to where we have in this area. Major support for Robinsons would be closer to 18 pesos per share.